Yay, Tuesday, top trades, my family. Don't be alarmed. I didn't get punched. This is a no strip that does help me breathe better. It really, really does. And I've noticed I sleep better when I breathe better. It's weird. One of those science things, I guess. Let's go review the market. I'm really pumped about it. Bang, gonna dive in. Broader markets first, and the cues really putting in some beautiful bounces, some really nice moves. Obviously, you had the ginormous candle back over here on Wednesday. And today, Monday, we gapped up, bull candle gapping up pretty much across the market and fading. Surprise, surprise. We've had gap fades on Monday every week for this year, essentially. Weekly chart. So we are above the 100 simple on a weekly. That's a very, very big deal. And I do actually believe that we'll make it back down there, 440, not necessarily today, but we'll make it back down there, which is, 30% of last week's candle, all that buying volume right there. And that'll be a zone where we probably bounce around and consolidate a little bit. So again, we bounced off of it on Thursday when we almost had a circuit breaker day. There was a lot of fear on that day, which is actually unfortunate because I don't know why there was a lot of fear. If we just back up, here, you had these, tweezer top style candles, huge, huge resistance there. And all we did was trade down halfway into that candle to retest old resistance, new support. It was actually a very, very obvious place to go long, which I did. And on some short swing trades and some day trades and things like that. So getting rewarded over the last 2 or 3 days. So a trade back down to there at some point makes perfect sense, but I really do think and believe at this point the low of the market is in relatively. And what that means is we can have one more little thrust down and that'll again provide some fear, but ultimately we do go higher. We have done a great job of keeping track of a lot of the broader markets. Let me pop over to SPY and then the Dow, and I'll go into some individual stocks. So this is the August 15th, 2025, 2015 bar replay. So again, essentially having that big run up, a little bit of a rotation down again at some point, a little bit of a higher move, which this higher move probably could and might send us into the 570 area. And again, we probably will have another little bit of a pullback, but we'll eventually chop out of this and continue to go higher. Markets really dislike the word tariff, and I think it's just a game of cat and mouse at this point. Tariff, no tariff. Again, find that weekly on the 100 and do your best to buy low, sell high. I think that's probably it. But if you're looking at this volume, I mean, you would have to say that's capitulation volume. If you were wanting a very strong buying signal. There you go. If you're like, how do I know the market's going to bottom? That's how you would know. So it's happened. It's here. Buy dips, and let's see if we can kind of keep chopping around and expect some slower but ultimate moves higher. Robinhood, very, very strong stock. The reason this is strong is because it actually did this morning reclaim the 100 on the daily. So we gapped above it. Obviously, an extremely obvious fade was going to happen today on pretty much everything. But this was one of the first stocks to take out its 100-day simple. And so those stocks are the ones I'm looking at for general relative strength. And there's most of these on this list. The broader markets have not gotten above the 100, 200 on the day. So I'm looking for stocks that have taken out or moved past those 100, 200 something moving averages on the daily chart. Robinhood's one of them. You all know that I got in on Monday at open. And if you didn't get in on Monday, I mean, you could have gotten in on Tuesday at 33, which is remarkable. So looking for something like this to occur. Earnings are just in a couple of weeks, 2 weeks, April 30th. I'm in this filthy, filthy collar on Robinhood. And that's pretty much about it. Here's the weekly chart. Weekly chart looks good. Again, we're above the 10, 20, 50 for the most part. So really, really strong move, gloriously huge pullback. I mean, on most things, this was down 53%, right? On most stocks, you just had these huge, huge, huge moves. So accumulation. And again, that to me means right now in a lot of these positions, you can buy 10 shares, 100 shares, 200 shares a day or a week and just make sure that you're accumulating. That's what the word accumulation means. And I think there's a lot of stocks that we should be accumulating. AMT, you all know that I've been loving this one forever, and I did buy some more off the 100 monthly, and that's because the 100 monthly and the 100 daily were identical spots. So I just put in an order at 200. This is just adding to a long-term investment specifically. So there's the 100 on the weekly you can see, and then the 100 on the monthly, all kind of right on top of each other, that $200 price point. So I got into some American Tower. I'm in that one. If you want to be in it with me, again, it's long term, meaning I'm just buying some shares when it's on a dip and expecting it to ultimately go back up to 260. I have done like 3 or 4 covered calls on it. I haven't done any collars on American Tower, just enjoying the dividends, buying a couple more shares here and there, doing some covered calls, adding to my position, letting it grow over time. AWK, very similar. Gotta love American, always bet on America. Daily chart bouncing off the 200, 200, and 100. So there's the 100 on the monthly, the 200 on the weekly, and the 200 on the daily. So buy the dip on this one. Again, probably a long-term utility dividend, pretty boring style play, but overall had a really, really nice pullback and looks like it's going to go higher. IRM, also a very interesting move. This is a REIT, and this particular REIT should, or at least supposed to do pretty well during a Republican presidency. You can see it did really well during the Democratic presidency with our boy Biden, and not so well during a lot of the Republicans. So it's kind of interesting. So maybe it doesn't do well during Republican presidencies. But this is a crazy big pullback on IRM from 130. Ooh, we're down 44%. Like that's a pretty big discount. What I'm really interested in is this weekly 100. We're just hanging out right at it. And, there's all kinds of strategies you can take advantage of on markets that are down near their long-term averages. There's a lot of fear around. And again, accumulation could be one of them. Day trading can be one of them. Option sales can be one of them. But this is a cool little move. And IRM near the 100, depends on how you want to play it, but it's a great buy low, sell high, awesome dividend stock. In fact, if I come back over here and adjust the chart for dividends, you will see it change a little bit. And by a little bit, I mean a lot, right? There's the weekly is all the way down here now at 81.61. So again, pretty decent dividend for Iron Mountain. Buy low, sell high. That's what I got on this one. Now, here's one that no one's talking about except for your boys, Argentina. So our boy Javier Villay, like he's having some good play out there in the world, and there's not a lot of tariffs impacting Argentina specifically. Now, the other really interesting thing is I'm loving a lot of the global ETFs that are international because there's going to be a lot of tariff fear and stuff like that out there. But if those countries don't get directly mentioned or impacted uh, directly, then they're probably going to do pretty well. And when I say directly, I mean what countries is Trump listing in his tweets? That's kind of what I mean by that. I don't mean that they're not having a tariff. I mean, is he making fun of them and talking about them? They're probably going to have not the craziest, insane uh, downward movements. But on this move here, I mean, anything like this is extremely viable. I actually just really like the Argentinian ETF. I like the trend. I like how the country has really done well of coming out of a pretty turbulent recession. And this is one of my favorite ETFs globally to keep an eye on and trade, including Indy and a few others. Here's Crocs, CROX. And the reason I'm looking at Crocs is they haven't actually reclaimed anything, except I think that if it gets down to 67, it's probably a really strong buy. And that might take a while. I agree with that. Here's the weekly long term. So we just failed the weekly 100, 200. Really, really good opportunity for option trades like bear call spreads or things like that. And the daily chart, we're kind of failing some of these. Overall, looks a little bit weaker. But I think with earnings coming up, if we take out this major support, I think we're going to go, a decent amount lower overall. And that could be a good short trade for some people. Or if you're looking for an exceptional long, you can wait down there at 67, pretty much based off this crazy gap that happened back over here, this previous all-time high. Their fundamentals are looking strong. They're still improving quite dramatically. And it's interesting to see that fundamental play kind of shape up on Crocs. You have a little bit of an interesting trend line right here as well. That again, if it breaks, Could be a lot of short opportunity on the downside. So hear what I'm saying. I think it's going to go lower before it goes higher, but ultimately buying around 67 makes sense, but there's a lot of room on the downside to make money. Celsius doing something totally different than the market. Right now, we've taken out all of this bear volume. This was the easiest fade I've ever seen in my entire life, except for today. Bull candle, massive bull candle, gapping up on earnings in a downtrend already. Filled the gap, came into the 100, and just a really, really good overall support. I think a lot of people probably drink Celsius and, you know, buy low, sell high. All this volume got trapped, which is fascinating. And not only did the volume get trapped at 34, which is again all that bear volume, but we closed above it. We've retested that volume, and that volume retest was also at the 200 on the daily. Really fascinating pivot price is kind of what I'm getting at on Celsius. Here's the weekly chart. Again, the 200 on the weekly acting as a little bit of a resistance. So 200 on the weekly chart, we are below that as of right now. Monthly chart, we almost got down to the 100. So there's some fun volatility to be had on Celsius down here for day trades and or some quick swing trades and or some option trades. All kinds of things you could at least keep your eye on. But this one, if you want to put on a volatility, watch list or something, my favorite would be something like this. Trade back down to here, trap some of these bulls, pop into the long terms. I did not do a bear call spread up here today, although I probably should have. I would look to do like a put sale or bull put spread or something if it trades back onto the moving averages. Maybe also picking up some shares if you drink Celsius. I don't think it's bottomed in the sense that it can't have one more low, but I do think the bottom is in on Celsius, and this is probably the lowest that we go in quite a while. So find ways to play it if you want to. And the last but not least, this is going to be a volatile monster, probably more day trade friendly than swing trade, unless you want to do something long term or unless you want to do the options. I think it's relatively simple. Big tariffs on China will cause most Chinese stocks to go lower, and no tariffs will cause it to go higher. I think that's probably the macro way to play this one. From a technical standpoint, literally all we did was trade up into the 100 on the monthly and fail that, which was hilarious. And then we just trade down to the weekly 200 and that acted as support. So it's really fascinating when you're like, wow, even Alibaba, which is like the number one impacted stock on all these tariffs, is still respecting its technical levels. That's wild. That's wild. And not only did it respect the 200 on the weekly, but also the 100 and 200 on the daily. So, I mean, if you were a net buyer today, you definitely got rewarded today, but you would have had to have some stones or you bought some calls or you just need to know what your risk was. So, Alibaba, it's at the levels to bounce. I know that sounds wild, but it is. It really is. And yes, you'll need to know your risk. And yes, it's probably better to, again, either day trade and or play this one with absolute zero options because we know it's going to be volatile. But if it trades down into these areas, I mean, the technicals are holding it up. The technicals are winning. So something like this on Baba would be expected at this point. There's a lot of really great charts out there. That's the cool news. And the ones I wanted to review today, I think the majority of them are acting different than the broader markets. Of course, not all of them, but ultimately what I'm looking for is just differences in patterns, differences in volume, differences in movements. I want to see something that looks not like everything else and kind of start playing that one, picking apart it, buying low, selling high, using options as hedging, and doing a lot of day trades. Day trades going to be very, very fun right now. But unless you want to be in the long-term game, like months and months and months, I think for the next 3 months, it's going to be very fun to simply buy the dip and sell the rip, or sell the rip and buy the dip. Meaning buying some shares, holding it for a couple of days, 3 to 4 days, selling it on a profit, rinsing and repeating that process over and over. Most likely going to be the best way to play it because there's going to be tons of news. We're not done with the whole tariff situation. Trump's not done grandstanding, whatever that means. And ultimately, there's just going to be a lot of ping ponging, a lot of volatility. Obviously, if you're trading futures, you're going to have a blast. If you're day trading, you're going to have a blast. But be wise. Understand that we're always here to help you. We're always here to pour into you. There's tons of strategies out there, but the easiest one, the GOAT, will always be buying and selling stock. If you buy 1,000 shares of anything and it moves 50 cents up, you make $500. If you short 1,000 shares of anything and it goes down 50 cents, you make $500. Stocks is second grade math over and over for the rest of your natural born life. Don't overcomplicate it. That's the process. That's the way to win. Hope these charts and trades and analysis helped, gave you a clear perspective. If you need anything else from me, reach out. Love you so much. Bye.